Hey everyone, welcome back to the channel. If you're new here, I'm going to explain about how to add indicators in TradingView, and we can also discuss top 5 indicators along with my personal favorite in this particular video. I'll also show how to place trades and what to monitor when we enter a trade using these indicators. So today we are talking about something that every trader, no matter your experience level, should understand. The 5 simple indicators that actually work. So they're not the fancy, complicated ones that looks like NASA software, not the ones that repaint like a bad makeup tutorial. Just 5 clean, practical tools that help you trade better. And yes, I'll also show you some examples using the trading view. But yeah, let's get into it. The first indicator that we are going to talk is the 9 and 21 EMA crossovers. So first of all, to add an indicator, you need to go to the indicator section in the trading view, like this particular section where you can add whatever indicators you require, and just type in moving averages, and you can see moving average exponential. And if you click once, it will add one time, and you can see here that the indicator got added. And if you click again, it will add one more indicator with the same settings. And you can customize here, like go here and click the settings, and I want to keep a 9 as the fast moving average, and I'll make it green, and the second indicator will be 21 period moving average, so it will be in red color. We can also make it a bit bold, and we can also make this particular one as a bit bold as well. So what does these indicate? So 9 EMA shows the short-term sentiment, which means it averages the recent 9 candles, and it will show us an exponential moving average, which means it gives weightage to the recent candles. And 21 EMA shows a medium-term sentiment, so it uses the last 21 candles, and it adds some weightage to the recent candles and shows us the moving average. So what is short-term sentiment? Which means if the 9 period moving average is like above the 21 EMA, that means the recent 9 candles are like showing more interest. It could be towards the positive side, which means increasing side, or it could be towards the selling size. So yeah, those are the two things that we need to learn from them. And then the crossover between them could be used as an indicator. You see, these are like the major pivot levels where the crossover has like a lot of risk reward ratio. But again, there are conditions where when the market is flat, or the stock is moving sideways, you see a lot of noise. So yeah, because institutions use sometimes EMAs for momentum decisions, so price tends to bounce on them during these trends. So when they cross, we often get clear direction, but again we need to filter out these kind of noise crossovers. So by experience you learn those things as well. Like you can use other indicators to filter these kind of levels. And yeah, So if you look at this, it has given like multiple good opportunities. This one was like a good opportunity, and you could have uh, taken a long position here. You could have taken a long position here, and yeah, it depends on like how much risk reward you want to take, and you can take a short position here. So like yeah, you can play with this indicator. That's again, it's not only 9 and 21, it could be like 13, 26, like 2150. You can play with these numbers. A strategy is not something which is like 9 and 21. Anyone can build a strategy based on the observations they do on the back testing. That is like a simple back testing could be like a visual back testing, like we did, like whenever it crosses, like what is happening, whenever it crosses down, what is happening. And you can trade those levels for like a week in the paper trading, and then understand how well that particular indicator does. And let's go to the next indicator, and it is called VWAP, volume weighted average price. It also includes uh, volume along with the moving averages. So let us see. Weight style upper band, I don't think we require those bands. And yeah, for volume weighted moving average, we might have to switch to the lower time frames, because it resets every trading day. So like if you use on 5-minute chart, 2-minute chart, or 10-15-minute chart, it would be more beneficial. And most of the time price tries to bounce on the level when it touches the VWAP. So a better price would be fetching stock at the VWAP level. So, and again, uh, it, it's like a fair value of the market during the day. So, and again, institution algorithms, hedge funds, they all watch VWAP levels. So simple rules are like above VWAP, it is a bullish bias. So whenever the price is trading above the VWAP, so it's not good to take immediate shots. And if it is below the VWAP, it's like bearish bias. And if it is rejecting the VWAP, it's more like a directional move. And if it is breaking through the VWAP, it could be a trend shift. So yeah, this is one more good indicator. And the next one is RSI divergence. So the relative strength index is where commonly we study that if it is oversold or overbought levels. But again, there is a relative strength divergence. So which means if the price is moving in one direction and if the strength is in a different direction, then it is called a divergence. You see in this particular example, you see like the price is going downwards, but the relative strength is moving upwards. Here you see the price is moving downwards, and the relative strength is moving upwards. Here you see the price is going upwards and the relative strength is going downwards. Why divergence happens? When the price makes a new high and the RSI doesn't make a new high, it's a possible reversal. Or if the price makes a new low and the RSI doesn't make a new low, then it's a possible bounce. So why it works? It shows that momentum is slowing down even the price hasn't turned yet. So which means when the momentum slows down, there is a high chance for reversals. And we can take entry points at those levels. So like you can try to enter lows, or like sorry, you can try to enter short position here, and you can try to enter long positions here. Again, sometimes it can hit, it may not hit, but yeah, so it could hit a stop loss in this particular trade. Yeah, and you can find these kind of trades almost every day. So, and the next indicator we will be taking a look is like a volume indicator. A volume is where uh, many trades or transactions has occurred in that particular candle. So if it is a 5-minute candle, so how many number of transactions has occurred in that particular 5 minutes, and it tells you a clear indication of where uh, the price is like more interested. And you see, like if you click the day chart, you see on this particular day there is a huge spike. And it could be, again, it could be like there are like other indicators which can tell you what has happened in this particular session. You can always use these high volume nodes as your reference. So you can, those nodes might act as support and resistance levels. So if the price again comes back to that particular candle, there is a high chance it could bounce up, because the price was not able to clear lower than that particular candle. So that means there is like a huge interest at this candle level, and you can mark that particular candle level, and you can enter those trades using a proper risk management. And the next indicator is like the 200 EMAs, like all these EMAs are helpful, but again, like 50 and 200 EMAs are like super helpful because they give us like a bigger picture of what is happening. So if the price is trying to stay on or above the 200 moving average, then better not to short those. And if the price clears down towards a 200 moving average, then we can enter short positions with proper risk management. So you see, like most of the times you can enter the trades based on this 200 EMA or like 50 EMA. Those are like huge uh, helpful indicators. Again, these are the most indicators that many people use. Even I use them. Like I particularly rely on moving averages most of the time, and then like again I use these high volume node candles as the base points for my analysis. And again, here is the truth: indicators don't work alone. They work when trend, volume, structure, like other indicators all line up, and most of the times they fail as well. So like to recap, we use 9 and 21 EMA just to spot the trends and entries. Use VWAP to understand what is the bias and where are the reversals happening. And use RSI divergence to spot reversals. Use volume to figure out where the real and fake moves happen. And use 50 EMA or like 200 EMA to understand the major support and resistance levels. So thanks for watching. And chats don't lie, indicators don't lie, but your emotions. So trade safe. See you in the next video.